Matt, if you want to kick things off with an introduction.
Appreciate it, Charlie. So my name is Matthew Barry. I'm Director of Investor Relations and Capital Markets at Nuclear Energy. I started my career at Deloitte as a CPA in accounting, spent a little over 3 years working as a sell-side analyst on Wall Street at a couple different investment banks covering precious metal miners, uranium miners. So I had some familiarity with the space. So the nuclear and uranium mining space for a couple of years, which was during a very interesting time back in 2018 to 2020 when spot uranium pricing was, $20 to $40, and people were talking about these supply-demand deficits and dynamics in the future, but we weren't really seeing it yet. And then after that, I spent about 4 years running IR at a semi-cap equipment provider in Long Island, Vico Instruments. So yeah, excited to be here today.
Thanks, Charlie. So Simon Irish, Chief Executive of Terrestrial Energy. My background is 10 years investment banking in London, came to the States, and 10 years in the investment management, asset management industry in New York, a sort of rather interesting, exciting time for the alternatives investment sector. Through a rather interesting set of happenstances that I will probably need another 15 minutes to explain. I ended up being one of the founder of Terrestrial Energy, joined a group of like-minded individuals in the aftermath of Fukushima to build a nuclear tech business. And I'll say at the time that was not the obvious thing to do. Certainly a very exciting moment now. Thank you, Charlie.
Hi, everyone. My name is Brianna Lazarowitz. I'm an energy economist at the International Atomic Energy Agency. I think a lot of people in the nuclear field kind of found my way here. I studied economics and energy. My first job out of my master's program was with the electricity regulator here in the US, looking at different energy policy, trying to quantify the changes in electricity prices based off of what was happening or proposed to happen in the market. I made my way to New York. I worked here for Bloomberg New Energy Finance on their North American power markets team, looking again, kind of all energies, and got really interested in nuclear after the 2021 Texas power blackout. Was interested how we were talking to a lot of our clients, which were a lot of big investment banks that have since signed on to being really interested in nuclear energy. But at that time, we were advising them on a technology X that was going to pair really well with renewables, but not be energy storage. It was going to be dispatchable and low carbon. And we didn't mention a lot about nuclear. And so that got me really interested. I found the position at the IAEA, and I've been there about 4 years now. So I'm excited to dig into what I've found out in those 4 years and share that with the rest of you all here today. So,
good afternoon. Thank you very much for this opportunity. My name is Guido Núñez Mujica. I'm the Director of Data Science at the Anthropocene Institute. And I have a non-conventional background that let me hear, but that seems to be common here. Non-conventional is conventional. I started as a biologist, and then I worked in the tech industry as a data scientist. And then I became a climate activist, emphasizing nuclear, because I realized as an individual, the single thing that is the most impactful I can do is save a nuclear power plant. I was part of the group that organized and helped to save Diablo Canyon in California. I'm based in San Francisco. And eventually found my way to data science applied to climate. Now I'm at the Anthropocene Institute. And one of the things that we try to do is to create awareness of low-hanging fruit that might be hidden by the leaves. So there are actions that you can actually perform that are not obvious, but once you put all the pieces of puzzle together, they become possible. And as an immigrant from Venezuela, my worldview is informed by using these technologies to make people's life better all over the world. And today we come with this idea of non-traditional revenue sources for nuclear projects based on carbon credits.
That's great, thank you. So, the title of the panel is De-risking Nuclear Finance. And there's been a ton of information that's come forth that today is generally talked about that. What I'd love to do, just because it's easier for the way my brain sort of works, is to break it more into pieces, maybe on a timeline perspective. And at least the way I think about it, which may or may not be right, and you'd be better qualified than I am to say so, is if you kind of think about it almost like kind of a 3-act structure, which is first, there's the research and development that goes into building your design. Ideally, you're getting kind of commercial input during that. You're getting to the licensing phase, ideally getting through that, particularly now with the shortened White House timeline for doing that. There's kind of Act 2, which is getting to your first of a kind reactor being constructed. And obviously, I think the numbers are something like that's 2.5 times more expensive typically than the nth of a kind, or at least it's estimated to be, since most of it is speculative. And then getting to kind of Act 3, which is where you've built up a kind of sufficient order book to start recognizing the economies of scale that I think everybody here, if there's a kind of unifying theme through the conference, is we got to get there to start actually getting standardization and you really get that kind of flywheel going. So, and then you start thinking about, do you build your own manufacturing facilities? How much are you outsourcing to folks like BWXT or Doosan or folks like that? So feel free to disagree with that structure, but at least that's how I've kind of thought about it. So would love anybody who wants to jump in, we can go down the row thinking about that, you know, kind of how you've approached it. And then for you know, particularly Brianna in particular, how you think about it, you know, kind of from a historical perspective and what you've witnessed, and obviously Guido, from your perspective in terms of kind of where carbon credits fit in and things like that. We might spend the rest of the panel talking about this, but that's at least how I've kind of broken it out in my head. And I don't know if Matt, if you want to address that, how Nano's approach that, and then anything you want to add more broadly.
Absolutely. So I guess I could start with sort of the phase 1 on the research and development side. So Nano is a unique situation in that we actually just acquired back in January the Kronos MMR, which is a high temperature gas reactor, helium cooled, utilizing TRISO fuel. And it actually had over $120 million, we estimate, of investment made into it. We acquired it out of bankruptcy for less than $10 million. So when it comes to the R&D side, we're very excited because we acquired an asset that we feel has a high tech readiness, already had a lot of investment into the design. And so I would say that that's one aspect of it. I would say secondarily, when we think about, you know, licensing and getting, you know, and advancing on the licensing front, we're also have 2 prototype reactors that we're advancing, one in the United States at the University of Illinois Urbana-Champaign, one up in Canada at Chalk River. And so what's interesting about that is that we've actually, based on, you know, advice from some individuals that work in Nano that have 20, 30 years of experience with the NRC, we actually got are getting the first prototype at the University of Illinois licensed as a research reactor, when in all intents and purposes, it will be a, you know, full 15 megawatt electric commercial prototype. But by doing so, by working with the university, we're actually saving hundreds of millions of dollars in licensing fees. So I would say the management team in Nano has been very strategic and forward thinking in this regard. And so that's another aspect of it. And, you know, in Canada as well, you know, there are, you know, the NRC and I would say the CNSC up in Canada, the regulatory body there, have a history of working together. And I would say the NRC, you know, licensing is probably the gold standard. And so we also expect to have sort of, I would say, benefits in terms of, you know, collaborations between the two as we advance in the US with the NRC. You know, we expect, I would say, less and more expedited process, but also less, you know, licensing related costs. And then the third approach I would say Nano has taken is that we obviously took a differentiated approach to go public back in May of 2024. Our management team and founder, you know, had the confidence that he could guide us, you know, post IPO. And obviously, as everyone here has seen, you know, whether it's Oklo, NewScale, ourselves, or others that are, you know, public, we've had some pretty favorable market conditions, a lot of interest, and so we've obviously benefited in terms of valuation, and we've, you know, successfully raised capital in a couple different ways, and are also setting, you know, the mechanisms in place to raise additional capital. So as we think about, you know, getting to, you know, licensed in the U.S. and in Canada, you know, we feel like we have not only the cash on the balance sheet, but also the mechanisms in place through, you know, a shelf that's currently under review to get us there.
And have you kind of given thought to, once you get through the licensing phase, if memory serves, I think you're using an owner and operator model as opposed to an EPC model?
So we actually, and this is really based on the conversations we're having with, data center customers. We actually have, a bit of flexibility here. So I would say a majority of the data centers or hyperscalers or data center operators, I would say a majority of them are focused on, they want the power, and they're, we're discussing, potential PPA type agreements there, which obviously comes with a lot more capital intensity. And then the other side of the thing, other side of the coin is we're actually having conversations with, data center developers that have a lot of the capital. They have, they're working with EPC firms and they have an operator in mind, and they're actually interested in licensing the technology, which obviously would have its own, respective benefits in terms of, less capital intensity and which would benefit a company of our size and where we are sort of in the development side of things. So yeah, I would say right now, and that's just one sort of customer, we also, when you think about, I would say the strategic importance of Canada for us, I would say Kronos was the first microreactor to enter phase 1 licensing in Canada. And why this is important is because there are, over, I think, 300 remote communities in Canada that are paying hundreds of dollars per megawatt hour for diesel. So very high and expensive energy costs. It's not clean. And the Canadian government is obviously well aware of this in terms of obviously the economic impact, but also the financial impact. So they have a vested interest, I would say, in having Kronos and other sort of microreactors, which are ideal for these types of remote communities because you don't need hundreds of megawatts of energy. You could have a couple Kronos there, and it could be very lucrative even when we think about early stage production where costs may be a bit higher. So yeah, I think spoken about PPAs and that's definitely an option, but also the licensing as well could be
More flexible approach. Simon, you want to, if you remember
Yes.
the question, if you want to take it.
I remember the question. That's I think I do. But in terms of our business model, I think it's possibly more conventional. We're not looking to build and operate. What we are looking to do as a technology company, as an innovator in the nuclear tech space, is to develop a power plant design. Our power plant design is called the integral molten salt reactor. It's 390 megawatt electric. It uses a molten salt reactor technology, and that technology choice is extremely important to us because we believe that has the operation characteristics to solve the problem that's worth solving as for the innovator, which is cost and affordability. We think that is the problem that you should take to an investor audience to say, this is the problem that's worth solving with private capital. The problem is cost and affordability. So that's our product. So what we have been doing for the last 12 years is developing that design. There is nothing to build unless you have completed a design, and you certainly don't start the construction process if you don't have, at the same time, a great deal of visibility into the regulatory process in front of you. We as a company, as part of our strategy to develop this technology 12 years ago, put the regulatory question front and center as part of our strategy to support capital formation for the project. And the reason we believe that was so important is that, on the one hand, certain generation 4 technologies, in our case, a molten salt reactor, on a first principle basis, they offer tremendous potential to solve the problem that we think is worth solving, which is cost and affordability. This problem has been recognized by many over many decades. So, if you looked at a T account, on the one hand, you've got that big opportunity on a first principle basis with a technology that can deliver something that's truly transformative. On the other hand, you've got no OPEX. So when it comes to inviting someone to take the next step of committing their capital to build it, you've got a bit of a persuasion problem. So we as a company 12 years ago said, we have to answer the regulatory question as the developer. We have to answer it quickly in a convincing way. We as a company took our design to the Canadian Nuclear Safety Commission, and in the midpoint last decade, 2015, 16, 17, it was Stressful Energy that led the SMR sector up to Canada. So we were the first to start the process with the Canadian regulator. We completed that process. Probably, I would say, we were probably the first to complete that process in its full scope way, in its intended way, with an engineering team in Canada. We did that, and the Canadian regulator completed its review of our power plant design in April 2023 and said no fundamental barriers to licensing. That 5-year effort, it cost us over $100 million, gave us that ability to answer in a convincing way that critical commercial question that someone who wanted to build and operate one of these plants needed to be answered. If they are going to start serious commercial discussion to you, is this licensable for commercial operation? Our NRC engagement has been in place since 2017. The NRC process still is a little bit different compared to the Canadian process. The Canadian process we believe to be much more effective to support capital formation for the innovation in the nuclear space. That's why we went to Canada. But given sort of the development of markets over the last 5 years, it is very clear to us that if you're looking to commercialize your system, the market you focus on is the US market, because the policy support, the depth of it, the depth of the market and the opportunities across many market verticals that we see at this point in time. So that's how we're developing capital raising for non-recurring engineering, developing the design. It includes supply chain as well, by the way. Supply chain. So when you're looking to say, here you are, we've completed the design. Yes, it can be regulated. This is why. This is who's looked at it. But also it can be built, because here's our supply chain. If you are to invite someone to build and operate a nuclear plant with your design, you also early on have to be looking behind you at your supply chain. You have to be pulling them into your project, okay, very early on, because it is you with your supply chain, including the constructor, the EPC, but also all your suppliers, your reactor vessels, the steam generators, steam turbines, and so forth. You have to bring that entire community along with you. So from our perspective, we are using, and this is a point that I'll emphasize, we're a generation 4 system, but using standard nuclear fuel. And that's so important if you are to come to the table today and say, not only can you build it because this is the regulatory clarity that we can provide, but you can operate it, because this is a generation 4 system, a molten salt reactor, but we're operating with standard nuclear fuel. So this is how we do it. It's standard nuclear fuel. We're tapped into the existing capabilities of the nuclear supply chain. So these are the methods that we have adopted, Charlie, that we think are so important in the capital formation process as a nuclear innovator, to put yourself in a situation where a decade later you have a design which has sufficient regulatory clarity and buildability that you can actually now move forward in this market and start and move forward with those commercial conversations with those that wish to own and operate the plant.
So just 2 really quick follow-up questions on that. The first one is, can you just explain for people quickly kind of exactly how the asset light kind of model works, particularly, at least my understanding, if you're kind of building out the P&L for this, is during the construction phase, you start actually collecting licensing fees even before can you just kind of explain that?
So we are during the construction of a power plant using our design, we are effectively a subcontractor. We're not looking to be the EPC. What we're looking to do actually is to rely on others that have existing capacity and existing scale, because this is not a race to first plant. The race that you have to convincingly say you've got a chance of winning is a race of fleet deployment in the 2030s. That's the race that will really deliver the Gold Cup. So from our perspective, the services that we provide start very early at the project level. If you first have to engage in this with the project when it's simply a site, developing the site from an environmental perspective to be a site that's zoned for an industrial use, which is a nuclear power plant. That's from the NRC does that zoning. The NRC has a process that's a Part 50 process involving a construction permit. That is the first phase. We're involved. It's our plant. We're involved in that whole process at the project level to develop the site, to start construction. We're involved in construction because of our design, and we're also we don't simply have a design. We have some key components, and we supply the fuel as well. So we play a major role in construction. Once it's operated, you have a Gillette-type business model here that, for 50 years after the plant's constructed, is operating. It's commissioned, and then you've got this 50-year tail, the operating cell. We'll be supplying fuel, O&M services as well, but also a key component, that primary reactor component, which is where our IP sits. We'll be supplying a fresh one of those, a new one of those, a replacement one every 7 years.
Yeah.
So that's our business model sitting across those 4 tiers.
Right.
Pre-construction, construction, and then during operation, you have component supply and fuel supply.
Okay. And just real quickly, because I think we're going to be
Yeah.
the first panel with a distinction where the moderator only asks one question, but just quickly on that, you mentioned supply chain of components. Have kind of the commercial off-the-shelf kind of options, has that changed the equation in recent years?
Well, off the shelf, you want to, I mean, you want to be plugging in. You don't want to be inviting your supply chain to commit hundreds of millions, if not billions of dollars of capital to come up with the component you need, because the order book problem becomes massive. You've got a chicken egg dilemma. We have the ability to use off-the-shelf components on the back end of our plant, the Generation 4 plant. So the back end of our plant where you have steam supply and you have generation, those systems, those thermal systems, electric generation systems, they're non-nuclear. And that's one of the virtues of our power plant design using our technology. That's not the case with light water reactor and conventional nuclear. So the steam turbine for a light water reactor is a highly specialized bit of nuclear kit, long lead time. In our case, we use the same steam turbine you see in a coal plant. It doesn't quite, it's almost out of a catalog from the major turbine suppliers, but it's not nuclear equipment. It sits outside the nuclear regulatory envelope, and from a supply chain perspective, again, a supply strategy that is intended to deliver scale to win that race for deployment next decade. If you're using standard industrial gear, a standard steam turbine that's not nuclear, then you've got a very good advantage actually from a scale perspective.
Got it. Thank you. And so, Brianna, I understand correctly, you're more of a kind of observer from kind of a higher level of people trying out these different models. So just kind of curious your thoughts on the ideal way to kind of run through this kind of gauntlet of getting to standardization.
Yeah, I think I can add some color to the transition between Act 2 and 3 that you mentioned, because I do think that Simon and Matt know much more about 1 and 2 and how to get financing for that R&D piece, and then through to licensing, siting, and all of that. I think on the third act of scaling up, this is something that we've spent a lot of time trying to gather case studies for what happens in other countries, and thinking about how this entire ecosystem works. Because while I think what we are doing and all the innovation that's happening, and this is something that I've been super thrilled to hear a lot of this week particularly, we as the IAEA have our projections for what the nuclear capacity is going to look like in 2050. And we do still see, according to our projections today, that SMRs will make out about a quarter of the world's added nuclear capacity to 2050. I think that there's a world after 2050, even though we love to use that date. And I think that we're going to see a lot of change in the time. And of course, our projections can also change. But zooming out to the rest of the world, there is still a lot of interest in meeting electricity demand, a lot of interest in meeting heat demand, that there is still a large market for traditional large reactors. And so I think that we all have a common goal, a common game to play here in this transition from Act 2 to 3. And how do we scale up supply chains, but how do we also scale up, and this I think is also chicken and the egg, interest in nuclear technology that we can fall down the cost curve, and how can we attract not just new revenue streams, and I think that tees up what Guido will talk about in a minute, but how can we attract private capital into the construction period? I hear a lot about technology vendors and this Act 1 and 2, where in the end, you're likely to get a lot of government money and some private capital, private equity, but you're being asked to develop a project, and that's not, in the end, the goal of a lot of these companies. You want to be a technology provider, and you don't want to own and operate a nuclear power plant for 60, 80, 100 years. And with my background in working with renewables projects, what I hope that we get to in the next 5 or 10 years is a field of developers that begins to exist, that will take a third party, that will take on this role that will take the technology and say, we'll own, we'll operate, we'll sell the electricity or the heat to the hyperscalers that also don't want to own this project. So we'll take that on. And the way that the field exists today for renewable or for oil and gas, and I think that that is hopefully the way that we're moving towards. And I think we're getting a push from one end and a pull from the other. And I'm seeing this market gap that I hope gets filled in the next 5 to 10 years. But at the IAEA, we're collecting a lot of case studies on how this is working in other countries. We're seeing some really interesting cases. Maybe I'll just highlight one of my favorites. In Finland, they have a really interesting model called the Mankala model, where they have really high energy users, so things like paper mills or other industries that need a lot of energy, but are willing to put up equity in the project upfront. So they have an ownership stake in the nuclear power plant, and it's patient capital. They're willing to put in that money ahead of time before construction begins. And then they have the offtake electricity at cost once the plant is operational. So this is one way where, unlike the hyperscalers, these high energy users are interested in owning a stake of that project. And so this is something that we're seeing that helps lower risk and gives access to capital early on. We've got a couple more examples. I won't bore you with all of them, but I think that actually tees up really well, getting into new ways of bringing in additional streams of finance once the project is operational, which can help sweeten the deal and bring in a new field of investors up front.
So just before we do, Bjorn, just
Yeah.
one thing I wanted to pause on for a second was, so I'm sure a lot of people's ears perked up, and maybe everybody always knows this, but kind of IEA's projection that 25% of new nuclear capacity will come from SMRs. There's obviously a lot of assumptions baked into that, I assume, at a higher level in terms of how much of the capacity is going to be filled by natural gas fired turbines. How the SMR kind of standardization race is going to play out, because obviously it's kind of whatever the right term is for something that influences another thing that influences back and things like that. Like, I'm sure you can't go through it all, but at a high level, can you kind of tell us what some of those assumptions are, and maybe more importantly, where people can kind of find the fuller explanation for how you kind of came to that?
Yeah, absolutely. So we update these projections as a high and low case for nuclear capacity and generation from today to 2050. It came out, our 2025 numbers just came out last week. So like I said, high and low case. The high case for this year's projections, so we had 377 gigawatts of nuclear capacity online in 2024, operational in 2024. And we project in our high case that goes all the way up to 992. That's a 160% increase by 2050. In the low case, we're about a plus 50%. And of the added capacity, we break down how much of that we expect to come from SMRs. Of course, it's 24% in the high case and just 5% in the low case. We have to be a little optimistic or pessimistic. And so it's a pretty wide range, but this is broken down by region in the report. I've given you just the global numbers, but this is something we update every year. And I think as we get closer and closer to commercialization of a lot of these technologies, I could see that share growing. Like I said, this is a projection we update every year, so
Global.
it's
What's the
global.
number for the US?
I would have to double check.
Okay,
I unfortunately don't know it off the top of my head.
Really disappointed in you. No, that's great. Thank you. And so, Guido, if I understand correctly, what you work on is kind of trying to think of maybe more out of the box ways of approaching kind of de-risking these various stages that we've been talking about.
Exactly. Thank you, Brianna, for a great introduction. You saved me a lot of time. And yes, I want to rescue a couple of comments from previous panels. I especially want to rescue the comment from the former Deputy Secretary of Energy of nuclear being not a project for decades, but for generations. We're talking here not about our children, but our children's children. And something from the last panel, there was a lot of talk about artificial intelligence, but I want to talk about natural intelligence, because the bulk of the demographic and economic growth this century is going to happen in Africa and Southeast Asia and South America. They are going to get electricity by whatever means they can. If it comes down to coal, they will use coal, because as bad as coal is, it's better than not having electricity. And that's something we must keep in mind. The only way in which we can avoid all these emissions is offer them something that allows them to develop and to industrialize their economies without increasing emissions. And the only answer that we have that's not geography dependent is nuclear. So we must find ways that this technology becomes available to each and every country. It cannot be only limited to these excellent, wonderful, magnificent AI and high-tech applications. It also has to be available for more traditional industry. Right now, African countries are very worried because they have these critical minerals that they can really profit from because they only export the ore rather than manufactured products or processed products for kind of supply chain. So that's part one. Part two is that we have all these systems that on paper are supposed to reward activities that decarbonize economies. I'm going to talk about Finland. Again, in Finland, they opened the connected Olkiluoto 3, their latest nuclear power plant. And in a single year, their coal use decreased 70% in 1 year only. And this brought a reduction in carbon emissions that if you turn it into euros at the current price of the European carbon exchange, will have been 320 million euros in one single year. And Finland has a very clean grid. In a country like Bangladesh, where they're about to finish a nuclear power plant, a large plant could abate 15 million tons per year, which at European carbon prices could be more than $1 billion yearly in revenue, only from carbon credits. So we have all these pieces. You have the fact that economic growth and demographic growth is going to happen in areas of the world that have no access to this technology, but also we have mechanisms that are not experimental, they are not new. We have policies that have been used to reward nature conservation projects, solar projects, wind projects, but nuclear is arbitrarily and unfairly excluded from this. This needs to change. And this is something that we can change from a policy perspective. It's going to be easy? No. But at the same time, when you deal with first-of-a-kind projects, you need a lot more capital. Once you get to nth of a kind, which we will in a few years, we should have the policy background and infrastructure that makes these projects affordable. And one way to de-risk it is to make sure that these activities by countries that are trying to do the right thing, like I was in Addis Ababa just 2 weeks ago, and the Ethiopian government announced a project to build a nuclear power plant. They're doing the right thing, and they should be rewarded by it. And the way to reward it is to make sure that this contribution is acknowledged. Thank you.
All right, we did it. One question. Thank you guys so much. That was awesome. But don't go anywhere. So we're going to open it up to the audience for any questions you might have for our panelist.
Charlie, maybe I could ask you a question. You said you invest in listed nuclear stocks. Maybe you could share with us what you're looking for in particular. We've seen an incredible run-up in these names, and I'm just wondering if you now feel that those names have gotten ahead of themselves, or perhaps are you pivoting at this point? Do you even look at private equity? I'd be interested to hear your opinion on that.
So I'm going to quickly pivot that to something for our panelists. I'll tell you quickly, I have, small brain job, which is just trying to find the winners. One of the things I think will determine who the winners are is how they approach kind of the commercial landscape. That's one of the big factors for us. So I'd be curious, particularly from Matt and Simon, but anybody else who wants to weigh in too. Presumably when you're thinking about the customer landscape, you are thinking about who's going to be interested quickest time to power, maybe they're more focused on Gen 3 reactors, security of supply chain. If it's folks who are going Gen 3, pressurized water versus boiling water reactor, less of a concern for you guys, but kind of, it's really interesting to me when you think about sources of customer demand, the way the product types kind of break down. Like, who are you kind of envisioning to be your ideal kind of customer? How do you kind of break down that customer landscape to translate into ideally getting to this nirvana of actually starting to build an order book that you can actually start financing off in the back of? I don't know, Matt, if you want to take it first, and then leave
Sure.
time for Simon.
Yeah, no, absolutely. So I would say for nano as a microreactor, a little bit, differentiated, obviously very differentiated from traditional nuclear and even some SMRs, but, I would say there's a multitude of different customers and use cases. So obviously the most prominent one being data centers, and for Kronos specifically, we could serve, 200, 300, 500 plus megawatt, electric data center projects, and obviously, the larger the project, and you have sort of PPAs there that are obviously bankable, that helps finance it. But I would say the other aspect is, the larger the project, it also, and having that type of strategic, I would say, customer who may also strategically invest in the company also benefits you in expediting development of the supply chain as well. And giving other members of the supply chain more confidence to invest there. So I would say that's one customer. Another customer, as we discussed, remote communities, where that's a unique use case in certain areas where they're paying hundreds of dollars per megawatt hour for energy, for things like diesel to ship that in. I would say military bases are also interested potentially, because they prioritize, I would say, energy security and energy resilience. And so that could be another area where, we could benefit from some, grants or other financing mechanisms. And then even, another panelist was talking about mining projects, and that's another area where obviously, if, we can get, costs further down, but even some projects are paying, high amounts in energy as well. That's another sort of customer option. So I would say there's a bunch of different use cases, and obviously, I think data centers get, the most attention, but there's a lot of other very exciting use cases as well.
For sure, Simon.
So I think you have to, when you're designing a nuclear power plant, you have to pick your lane. You can't be all things to all people. We have a small modular reactor, a smaller modular nuclear power plant. That produces about 800 megawatt thermal. If you want to use all of that for electric power generation, it's just under 400 to 400 megawatt electric. We think that is right-sized for the market opportunity. You think a super large plant, gigawatt plus, if you've got two of them in a conventional AP1000 format, that's too big. It's too big because there's a serious break on any private capital formation around a nuclear project. The project risks are just overwhelmingly large for any private sector consortium involved in that project. So we want it to be small enough to be financeable. We want it to be big enough so that we can lean against the economy of scale that will always exist in the nuclear section. That's the economy of unit scale. You want to be as big as you can for your market opportunity, because that drives your capital efficiency. So the three sectors we're focused on are the ability to supply from a near or co-located point, a customized mix of heat and power, to perhaps an industrial plant, chemical plant, petrochemical plant. It could be a mine as well. You can customize that. You can also, if we go into just purely customize it for electric power generation, the back end of that plant that sits outside the nuclear regulatory envelope, we could customize that to the needs of a hyperscaler. Their needs is not about customized heat and power. Their needs are slightly different. Their needs about sort of N+1 redundancy and resilience and so forth. So you need to start integrating systems. You need a system effect. The capabilities we have there with back end of our plant, with the industrial partners that we've got involved in our projects at the moment, would be to customize the back end of our plant that sits outside the nuclear regulatory envelope, so you don't have to go back to the NRC, is to use natural gas, so that you can use natural gas to start the back end of that plant It's a power plant. It's just not driven by nuclear systems yet. Within 5 years, and that delivers the commodity, the product that so many are clamoring for, particularly in the data center section. That is, give me an electron of any color. But by the way, over the medium term, I want that to be green and clean. So you give them that at the back end, and that resonates with the hyperscalers. They feel they have a sort of they still hold a moral position on powering their data centers in a socially responsible way. But at the front end, you can give them that capacity so that they can run the race that every software and tech developer in that space has, and that is it's a race to market share. They need electrons. We give them the electrons because we can do that using natural gas as a bridge through this customization process I spoke about earlier. And the third one is the third sector is on the coal front. The coal is a lot of coal plants in the United States are getting to the end of life, and I still think there's still nameplate capacity of about 250 gigawatts in the United States. That may be a replacement wave for smaller modular nuclear power plants, about 100 gigawatts. And we think, given certain design feature of our power plant, we're competitive in that sector as well. And I'll leave it there and turn it back to you, Charlie.
Great. So that does it. Please give it up for our panelists.
Yeah.
So